when you first get into crypto, right, you're like, okay, Bitcoin is real technology. What else is out there? What you don't realize is that all of these other projects, they're really operating as startups. And there are insiders that benefit from all of this, right? So the insiders are going to sing the praises of this technology. The marketing is going to have its effect. Versus Bitcoin, there's none of that. There's no marketing team. There's no insiders who are going to disproportionately benefit and treat retail as exit liquidity once they can get out. I think there's a common problem in crypto. Like, there are super smart people who have a narrow field of vision. It takes a totally different lens, or you have to look at it from a different angle and come back to this much bigger picture understanding of this isn't about technology. This is about money. This is about value.
Archie. Jesse Myers, welcome to the podcast.
Thank you very much. Thanks for having me.
Yeah, man. I say it every time we get an international guest. Thanks for coming into the studio, because I'm so tempted to reach out and just do an interview with all the people I've gotten to know online and become familiar with. But then I'm like, I'd love to wait until they come to London, and it's just fortuitous if it happens. So thankfully, we've got the opportunity to sit face to face and chat.
Worked out great. Happened to be in London. A lot going on here, and excited to talk.
I have been in this space just over 5 years, and you were one of the anonymous accounts or undocked pseudonymous accounts similar to me. So I took very early notice of you, and you used to write these really interesting posts from the perspective of someone who was following, I don't want to call it a traditional path, and I'm not sure if elite path is either the correct word, but it kind of is apt, I think.
Yeah, the ivory tower. Yeah, the ivory tower is kind of how I think about it in hindsight. In particular, I was on the gilded track, perhaps. The well-heeled professional world track.
So put some detail around that. You went to a really good university. So which university did you go to? What did you graduate in, and what was your path after that?
Yeah, I went to USC. Then I immediately got a master's of accounting at UT Austin. That led to getting a job as a management consultant at Bain & Company, one of the premier management consulting firms.
Yeah.
And then that led me to getting an MBA at Stanford. So kind of ended up in quite a well-heeled circles, as you'd say. And the track ahead is, keep doing that, right? Like, and that's what everybody in my world was focused on, is like, what elite opportunities can you unlock and access and work hard to obtain.
Yeah.
And that was what all my peers were doing and what I was doing. And then my path changed as I kind of fell down the rabbit hole.
Yeah, that's really interesting. And the reason for people who are listening or watching this, the reason we're going through that is not to recite Jesse's credentials, but a really important piece of work that Jesse did in the last cycle was to publish an article about, I'm trying to remember the title, but it was basically why yuppies don't get Bitcoin.
Yeah.
And for those of you who are not familiar, yuppie was a derogatory term used for young professional, sort of upwardly mobile, aspirational class of the 80s and the 90s, the sort of the Gordon Gekko sort of era. And it kind of stuck, and it's just such a beautifully sounding pejorative too, isn't it? And so you wrote this article that I was so thankful for you having done so, because it was everything that I was thinking about as I would have these conversations with people in the different worlds that I would traverse, and they just wouldn't get it. And I was so utterly resistant to it. And I thought, thank God someone has just expressed everything that I'd been experiencing with these people. But more importantly, it was someone from the inside who had experienced it themselves. Like you were on that sort of path. You had lived in that world. You understood what these people actually thought. So, like, can you just give us a recap of what that article was about? Because I think it was one of the seminal pieces of work in the Bitcoin space with respect to Bitcoin adoption. It helped some people to understand some of the barriers that people faced when having these discussions. And I don't think it gets enough credit, to be honest.
Thank you. Yeah, I wrote that in 2020. It was why the Yuppie elite dismissed Bitcoin. And it came from my experience of, my frustration with trying to talk about Bitcoin with my MBA friends. Every Bitcoiner has the experience of, once you realize how incredible Bitcoin is, you want to talk about it with everybody. all of your friends and family, and so you become zealous and the Bitcoin guy, right? You become that maniac. Um, and in my various friend groups, people would entertain it or half-heartedly listen, but then my MBA friends were downright resistant to it, almost hostile to this idea. And you'd think it would be the opposite because these are MBAs who should be very interested in money and finance. And but it wasn't that way. It was very frustrating how they offhandedly dismissed it or thought that I had gone crazy, kind of glazed over look in their eyes. And so I wrote, I thought about it for months and months. Like, why is this? What's happening here? Because these are super smart people who are interested in money and finance. So what's the gap between my MBA friends and all my other friends? And eventually it coalesced for me into this framework of, it's not an IQ test as people sometimes refer to it. Instead, it's a combination of, having sufficient intelligence and curiosity, but also enough distrust in the system to then be receptive to something that is outside of the system and designed quite contrary to the system. And that's what, if you've invested your life, your career, your education in learning Keynesian economics and the world as it is in terms of finance, it's a sort of threatening proposition that maybe there's something different and better that will unseat, finance as we know it. And I think that's the nature of that hostility that every Bitcoiner experiences when you go talk to somebody who works in finance or has an MBA, or maybe they're a lawyer or a doctor, and they think they know the world quite well because they're smart and they're educated, and then they're just not open to something that requires distrust in the system.
Yeah, really interesting, because I think society at the moment can almost be split between people who have trust in the system and institutions and people who don't. And when we say the system, we do mean like public institutions like media, for example. They're private enterprises for the most part, but they are public-facing representations of the system and the mouthpieces for them. Politically also, people who have trust in the political process and two-party system. We're now seeing in America where the number of independents, self-identifying independents, is greater than people who identify with either party, right? So like we're seeing a schism in society. If we just keep it in the American context, I think most people can relate to that, where people are losing faith and trust in the system. But then we've still got like 60 or 70% of the population who will still sit down and watch the nightly news and wait to be told what actually happened. And I have these discussions with some people online in some other places. And in fact, we had a recent discussion about reliable news sources, right? Guys, which reliable news sources? And they were just like, a laundry list of mainstream media publications, and they pay for them. Like they subscribe to them, some of them for like 5 or 6 different publications. And I'm like, guys, I don't actively read any of them. I can't remember the last time I went to a homepage of any of these organizations to read what was happening. Like I might be directed there if I find something somewhere else, but I'm not going to the New York Times or the Guardian or the Telegraph or the Financial Times and going, what's happening in the world today?
Yeah.
And reading their homepage. But like, I think that schism, that division in society between those who still have invested in the existing system to fulfill their aspirations, or still see the institutions as credible enough authorities to tell them what's happening or to take care of their, public interest. And people who are like, actually, what's going on here?
Yeah. I've described Bitcoin before as Bitcoin is the reward for free thinkers in a time when free thinking is much diminished. And I think that's true with where you get your news from. You got to parse out the garbage from the signal, but I find Twitter to be a more reliable place to get, actual news
Yeah.
than any of these other filtered and skewed mainstream media sources. But inherent in that is that I like to make up my own mind, and I think that you have to be that kind of person to find Bitcoin this early, and over time that that will shift, as it becomes consensus.
But isn't there a disconnect there with the sort of people we're talking about in sort of your milieu of education and in your professional milieu as well? Is that their self-image would be of people, if you ask them, do you think you're an innovative person? Yeah. Do you think you're open-minded? Yeah. Do you think you make up your own mind? You think for yourself? Yeah.
Absolutely.
And yet, like the way we view them, like outside the system,
Yep.
is like you're so beholden to, all of the axioms of your environment, of the institutions that you work in. And I've worked in a lot of large organizations. I see the way conformity works.
Mm-hmm.
I see the way the signaling starts from the top and then people just pick up on it. And they're very adept at it. And I don't know if they realize what they're doing. It's a conscious thing. It was something I could just never do. I could never do it. And it's not the only reason, but it's one of the reasons why I had to leave.
Yeah.
But once you see that, sort of how that dynamic, how it works, the signaling from the top and the people who receive the signal and adjust and accommodate, you realize that there's something, it's borderline pathological in terms of some of how it manifests from there. And I found it really suffocating, actually.
Yeah, that sounds right. I think that's the experience of free thinkers when put into an environment like that. And yeah, there's a subtle arrogance too of like, the yuppie elite, as I label where I come from. They think they have the best information. They think that they are the smartest and most informed, and they are interested therefore in what others in their peer group think, because they know that they're also smart, informed, and so on. And then everybody else who's outside of these inner circles of, large organizations and elite finance and business are therefore not in the know. Because if you don't have access to that world and that information, you're not in that world. How could you possibly have an edge on me, right? So if you're outside of that, you're alone in the wilderness from their point of view.
Yeah.
And yeah, there's a deep, unquestioned conviction that the yuppie elite know best, and I think that unfortunately is a part of how our governments have started kind of doing what they think is best.
Yeah.
Even when the electorate mandate is elsewhere.
Yeah. I think we saw a similar dynamic between publications like WikiLeaks, Glenn Greenwald through the Snowden leaks as well, and the mainstream media, where there was just complete and utter disdain for them.
Yeah.
For at least for Julian Assange when he started, publishing all these massive scoops, there was just this clear disdain for him, at least in the establishment media in the United Kingdom.
And it all comes from this sort of subtle assumption that the governments are acting in the best interest of the people, and they're doing right by their citizenry and their countries, and just trust the experts. Really,
and some of it's gatekeeping as well. Like Assange was clearly treading on some toes, right?
Yes,
like that's supposed to be our job, and it shows them up for not actually holding powerful people and institutions to account, right? And so that was a shattering of their self-image. Hey guys, if all this is going on, why weren't you telling me about this, right? He sort of brought that to bear. And the interesting thing is like they never gave him credit for that, but now they've co-opted all of his sort of principles, at least in marketing, right? So they claim everything that he wanted to achieve for themselves now. And I know The Guardian did some good work on the Snowden files as well, because they collaborated with Glenn Greenwald and few other publications as well. But like, what have they done since then, right? It's like,
and like the Washington Post, their slogan is "Democracy dies in darkness," but they're the mouthpiece of darkness.
They really are.
They're not shining a light on really anything. So I in a funny way, it's like it's a cultural manifestation of the Cantillon effect, where you don't want to rock the boat. You just want to get the nice cushy job and everything's all hunky dory. Why would you jeopardize your meal ticket by questioning authority? And when you believe that the government doesn't lie to people and is acting in the best interest of the world and all of its citizens, and then if you were to ever examine that assumption, how absurd.
Break down for us the Cantillion effect first of all, and then how it applies to what you just said.
Yeah, the Cantillon effect first observed, I think by a French economist.
That was his name.
Yeah,
they named it after him. Yeah,
Richard Cantillon, 300 years ago, something like that. And he observed that when there's a money printer, when somebody has control over the mint, the people closest to that power source benefit and become rich. And so the Cantillon effect is, if you're printing money, the people closest to the money printer disproportionately benefit. The people furthest away from the money printer, on a relative basis, lose out.
Yeah, not just in how much they receive, but when you receive it is really important. Because the underlying assumption is that money printing will drive up inflation, prices will rise. So if you're the first person to get the issuance of new money, you're buying at existing prices before the inflation hits the market. Once that money flows into the rest of the economy, everyone else is buying at inflation-adjusted prices.
Yes.
You're not getting more money. It's kind of like, I read something today. I told this guy saying, I told a friend of mine her house isn't actually worth more, the dollar is worth less.
Yes.
And I think I broke her mind. And it's like, yeah, people don't realize you don't actually have more money.
And the assumption there too is, the people closest to the money printer runs, they get paper and then they go and buy the real estate. They buy the hard assets. And those are real and valuable, and everybody else bears the cost of the money supply growth. So you've changed the denominator of how much money there is in the world, but you haven't changed the how much real assets are in the world. So everybody else's money gets worth less because the denominator has now grown, and the Cantillionaires benefit by buying up the scarce assets.
So the corollary to the premise of your article is that the people who are within the system who are going to benefit from the system are the last people who will then undermine or discredit the system, right?
Yes.
If it's not coming from the system in which I'm invested in, how could there be something outside the system which shows it up for being, I guess, a corrupt form of operation?
Yeah, but importantly, it's not malicious or knowing. It's just that these are smart people who have, for their entire lives, figured out, if I work hard, if I study hard, if I try to get that internship, good things will happen. And that has played out for them. So their entire lives, they've had increasing trust in this system works. Yeah. I put in effort, and then I am rewarded by promotions and opportunities. And so the world is a great place, and the world order as it exists is well designed, and everybody's acting in the interest of the collective good, right?
Yeah. I mean, we were just discussing before. I don't mean to disparage these people. I was one of them in aspiration. I thought that's what I wanted as well. I got into a bank graduate program by the skin of my teeth. It was basically the only reply I got to my job applications, and even then they wanted to interview me twice just to make sure, because I was a little bit wild in interviews, right? A little bit sort of precocious, let's just say, a little bit outspoken.
Thinker.
Yeah, free thinker. And so as it turns out, they were right to question me. I'm not a corporate type of person, but they saw enough to me like, I think we should get him in, but I'm not sure if we should get him in either. So I was like, so I thought I wanted to do that, but as it turns out, we were saying pre-podcast, as soon as I got in there, I just found it suffocating. So I don't mean to disparage these people as being, of poor character or anything. It's just incentives, right?
Yeah.
And you sort of take them on subliminally, and before you
Yes.
know it, you're behaving in a way that you're not really doing it consciously. You've just taken on that certain information from particular sources has credibility, and if it's outside of that,
and it's been modeled for you by the people who are senior to you in these organizations. Like if you think about the sort of battle between Austrian economics and Keynesian economics, that was a battle that was waged 100 years ago. And these are competing schools of thought. One says value is based on scarcity, and commodity money is what's real money because you can't print more of it. And then Keynesian economics says money is money, and we can print it, and we can stimulate the economy by doing so. And those competing schools of thought were at odds, obviously, and battling for dominance. And then one of those suits the interest of government. And so I think, it's no surprise that Keynesian economics ended up winning out. And every faculty member for the last 100 years has been a Keynesian economist. And so every business leader for the last 100 years has learned Keynesian economics as, settled science and dogma, really. That when you're in business school, Austrian economics doesn't come up. It only ever comes up as the butt of a joke, and it's never considered on its merits at all. It's never even discussed.
You didn't encounter any of that economic
Never.
philosophy at all?
Not once. I mean, literally just as a joke. Like you occasionally get a jab at Hayek. Because obviously you can stimulate the economy, and it's better to manage the economy through stimulus. Obviously, right? Like that's what's deeply embedded and has been for 100 years. So it's not that the people at the top of these organizations, they learned 40, 50 years ago from people who were already 40, 50 years into the Keynesian dominance era. And so there just hasn't been any kind of question for 100 years about whether or not Keynesian economics is correct. It's been a total propaganda victory for this form of economics that suits government interest.
Yeah, that's really interesting because it's almost like a division between tinkerers, people who think that they can tinker with an economy and direct it and guide it. And then the other school is just like, just let it be.
Free market.
Just let it go. Yeah. But if you spoke to Keynesians, they'd still think that they were, free market capitalists. They would still think that that's what they're espousing, right?
Yeah, to a degree. I mean,
none of them think, well, not none, but it's not like they think that they're proponents of socialism or communism.
No, right. They think they're proponents of markets, proponents of capitalism.
Yeah.
But yeah, it's ultimately a skewed, flawed form of capitalism. It's capitalism where you control the monetary unit, and so it's a free. It could be a free market for everything except the money, which underpins all economic calculus. So and at no point do they look in the mirror and ask that question of like, okay, so I'm supportive of free market. They could, you could have a rather free market positive economist or business person who at no point would then look in the mirror and say, should we have a free market for money also?
Yeah.
Yeah.
It would just be an alien concept. To them,
Exactly.
right? It's like, what are you talking about? No, that's the government.
And it's because you're not exposed to that in school. Like if Austrian economics as a school of thought was it ever part of your coursework, you would start to wonder, like, is a free market for money a better form of money?
Have you we're talking about why people are resistant to Bitcoin when they come through elite institutions, through education and work as well. Have you found a crack in that sort of that wall?
No, it's kind of the surprising answer. I think as with everybody else, as with all Bitcoin skeptics, what moves the needle for my MBA friends is when Bitcoin rallies. And they feel the FOMO. They feel the pain of being on the sideline. And invariably, these people end up buying at all-time highs. And so you break through the prior cycle high, and Bitcoin's running, and they're in so much pain and increasing pain as the price goes up that finally they capitulate and they buy some at a local high.
Yeah.
Oftentimes.
And then they get burnt, and then it's like they write off Bitcoin.
They get burnt. Some of them are wise enough, or have conviction enough, or balls enough to buy the dip and average down and keep holding, for 4 years.
Mm-hmm.
And then they become quite happy about that,
Mm-hmm.
and become more and more open to Bitcoin. At this point, I've got a handful of my MBA friends hold, some Bitcoin and have for 5 years, and they're quite happy about that.
Yeah.
The ones that I couldn't convince are not happy about that.
It's always filled with regret, right?
Yes.
So because I think deep down they understand that it was an error of judgment that they made. And I think, if we can just convince people, if you get through one bear market, you're gold.
Yeah.
Absolutely gold. I got some friends into Bitcoin. Not many. I don't orange pill people, by the way. People, I know that might surprise some people, but I don't talk about Bitcoin with my friends unless they want to talk about it with me and they ask me.
I've gotten to that point too. For probably a year or two, I was zealous and wanted to talk about it with everybody. But you once you've made your effort, it's up to them.
Well, for me, it was to keep me grounded, basically, because I was so obsessed with growing this account in the last cycle. I only started that in 2021, and it was such an exhilarating experience and all consuming. I was just totally immersed in that, and it was just because I was also anonymous and all the rest of that. I just was like, I need a break from this. I don't want to go to a dinner party and talk about Bitcoin and it become like the sole reference point of my whole personality. I didn't want that at all. And then that turned out to actually be a good thing because I saw the frustrations that people were expressing on the timeline about orange pilling people who weren't really interested in Bitcoin. And I'm just like, why would you do that? It doesn't make sense that you would force feed someone something like that. Because like the whole point is like the hard sell has never appealed to me, right? Not in relationships, not in business, not in anything, right? And so it's like, if someone asks me, I'm more than happy to go into full detail. I'll walk them all the way through to self-custody if that's what they want, right? So it's not a question of effort for them, but I don't want to force it down anyone's throat, and I don't want it to be something that dominates my social life either. I think one of the mistakes that we make as Bitcoiners with orange pilling is that we think we have to like impress upon someone how much we know, like how impressive we are with the economic philosophy, let people know that the government is corrupt and tell people about the Cantillion Effect and all this sort of stuff. I mean, really, it's like, it should really start as, does the person identify a problem in their life that you can present Bitcoin as solving? It's like basic sales skill, right? What's the customer's pain point? And I think too few people recognize that. I think that should be the starting point. I think. Have you experienced that?
I mean, that's very wise. Like that's the end conclusion that makes the most sense. From my point of view, I've always been, I guess, bookish, right? And when I finally considered Bitcoin from the Austrian economics point of view, like I finally opened up to Bitcoin maximalist content, because I was an altcoiner before. I started out interested in Ethereum and then all the other technology improvements.
Yeah.
I thought it was all about technology. I was steeped in Silicon Valley ethos, and that's what you naturally switch to.
Because there was a big sort of propaganda campaign stemming from Silicon Valley. The whole blockchain, not Bitcoin, came from Silicon Valley.
Yes.
In it for the tech sort of thing.
Yeah.
And so that's why you see sort of, I think Lex was of that mind where, he gave this sort of red carpet entrance in for Vitalik to speak about Ethereum. And then for the Bitcoin podcast, he gave this huge warning before before his podcast. And it was like, what did you give a warning before Ethereum? No.
Yeah.
Why did you do it before the Bitcoin one? And Bitcoin's the more solid proposition anyway. It just didn't make sense. But like he's also steeped in, Silicon Valley culture. He's an AI researcher at MIT, and he started his podcast as an AI podcast as well. So it's like, yeah, that's where it started from.
Yeah. That ethos, it gets you. When you first get into crypto, right? You're like, okay, Bitcoin is real technology. What else is out there, right? And you get excited about everything else and all the marketing claims of how, there's transactions per second, and this is vastly better technology. And what you don't realize is that all of these other projects, they're really operating as startups. They have a war chest. They had a funding round, and that means they've got leadership and that's directing the entire project, and also marketing, right? So there are insiders that benefit from all of this, right? So the insiders are going to sing the praises of this technology. The marketing is going to have its effect. And versus Bitcoin, there's none of that. There's no marketing team. There's no insiders who are going to disproportionately benefit from, and treat retail as exit liquidity once once they can get out. So it's, Bitcoin for the last decade lost that battle of, I guess you could call it like a information war, culture war of like, what's the default assumption about?
We're definitely reactive. Like there's no one funding marketing campaigns for messaging in Bitcoin.
Right.
So what we find is like, it's 2 months into a FUD campaign funded by bloody
Solana.
Ripple or Solana or whoever it is, and we're like, hang on, where is all this coming from? Like suddenly, and then we have to respond to it. Whereas, because we're not a centralized, Bitcoin's not a centralized thing, and the culture is more having to be reactive to other people attacking Bitcoin in order to sort of pump their own bags.
Yeah.
That was a really interesting thing to see, actually, because I wasn't aware of, because quite opposite to you, I just started at Bitcoin, and I never ventured into all that stuff.
That's rare.
Yeah.
But probably more increasingly common, right? Like I feel like there's enough information out there. I think MicroStrategy helps a lot too, and people look to Saylor as, he's a billionaire who's super sharp, and he's become more and more of like a signal for a new entrant to evaluate. Okay, what's Michael Saylor saying, and then what's Vitalik saying? I feel like that's probably
Vitalik seems to be having an existential crisis, mate. I like, does he believe in Ethereum anymore? Because in the bear market, it felt like he was having a bit of a meltdown, right?
Yeah, and I've
super smart guy, by the way, extremely smart, extremely talented. Obviously, right? It needs to be said because sometimes it gets lost in the sort of the rivalry between Bitcoin and shitcoins.
Yeah.
But he seemed to be like really struggling with what the hell his project is meant to be.
That's kind of good to hear. I think inevitable. I think there's a common problem in crypto of like there are super smart people who have a narrow field of vision, and so they're focused on the tech. They think that they genuinely believe that they have a better protocol because they've solved all the technology deficits as they see it of Bitcoin. But it takes a totally different lens, or you have to look at it from a different angle and come back to this much bigger picture understanding of this isn't about technology. This is about money. This is about value. And money is the mother of all network effects. And it tends to one, right? Like this is, in the history of money, that's what's so great about the Bitcoin Standard as a book is it's really not about Bitcoin. First third of the book, which is where I think most of the value is, it's just a walk through monetary history.
Yep.
And it shows you how the free market of commodity money converged on gold as being the scarcest money that you can hold, and therefore the hardest to make more of, and therefore the hardest to, it's the hardest money, and therefore the safest way to store your value and not allow anybody else to confiscate your value by printing more. For example, like, there were cultures in Africa that valued glass beads and treated glass beads as money. The Europeans figure this out, and they send word back to Venice, where all the glassmakers make literally a boatload of glass beads, ship that down to Africa, and the Europeans offer abundant glass beads in order to buy the property of the Africans. And on the other side of the deal there, the Africans are like, well, this is the money that I value, so I'm going to say yes to this deal.
Yeah.
And obviously, in the grand scheme of history, that's a terrible decision. And you can't do that with gold, basically. You can't print more gold. It's very hard to. They mine 1.5% to 2% more gold every year. But that's the hardest thing to make more of in the world, and that is why we converged on gold, across the world. Gold ended up winning in a head-to-head competition between two monetary standards.
Now, there are some people who believe that Bitcoin will ultimately be like the global currency. Do you subscribe to that?
Yes, I think it's a little different from how many Bitcoiners view it. I basically agree with Michael Saylor that I think Bitcoin becomes the foundation of value and store of value assets. But you can have your dollar on top of that, and it you can have your other currency, your transactional currency, exists alongside that. In the really long arc of history, like hundreds of years from now, I think it just ends up not making sense to have the additional currency on top of Bitcoin, and you end up just using like the Lightning Network or whatever other layer 2 scaling for Bitcoin, and that'll be like the end state unit of account switch that'll happen in literally 100 plus years from now. But until then, I think Bitcoin's role is to be the best store of value asset in the world, because it's the only store of value asset that has increasing scarcity of new supply issuance. Literally anything else in the physical world, there's no set schedule that can guarantee, one, a finite amount of anything, and two, increasing scarcity of new supply issuance. So those are both unique to Bitcoin. And I think those are the core reasons why Bitcoin is a better store of value asset than anything in the physical world. Gold, art, real estate. You can make more real estate. You can dredge swamp or clear cut forests, or make sand islands off of Dubai. You can't do that with Bitcoin, right? And you can mine more gold. You can get it off of asteroids, and you can't do that with Bitcoin. And with art, there's a certain number of Picassos in the world, but they could find more. And more importantly than that, there's always new artists. So there's always more art being created, and you can define, the art world now values an extra set of artists as well. So, just for some comparison there, Bitcoin doesn't have those problems. And I think what will happen, Saylor has gone out and said that 50% of the world's value is just looking for the best store of value asset, which just means, how do I park my value in something and propagate it through time, undiluted, such that I can use it in the future? And hopefully it grows in value along the way relative to everything else. And Bitcoin offers that in a way that no other asset can, because of the increasing scarcity of new supply issuance. There's less Bitcoin being made in the future than there is today. So ostensibly it'll be worth more, assuming that ongoing adoption happens as people realize this.
I feel like culturally there's a constant tension between people who are proponents of store of value or means of exchange constantly. I don't really see why that needs to be.
Yeah. Yeah, I also think it's you know, a lot of Bitcoiners spend a lot of time talking about like circular economy and like
Hmm.
spend your Bitcoin, and I think it's kind of a moot point for now. Um, I think back to I guess it's from Origins of Money by Menger, and spelled out very well in Shelling Out by Szabo, that the properties of money are path dependent, and you start with a commodity. Money starts as a collectible, which means just a small group of hobbyists, or small group values
Hmm.
pretty shells or Pokemon cards or Bitcoin, right? And then if that small group reaches a critical mass, other people outside of that collector group start to realize that the commodity that they covet has some market value, and therefore I assign value to it. Like I would value a rare Charizard card, not because I care about it, but because I know I could sell it.
Hmm.
Right? And so then you start to go through this transformation of it's no longer um, a collectible; it starts to become a store of value asset. And if that commodity has the properties that matter for being a good store of value asset, it can grow into that role fully. And it's no longer really a collectible; it's now a store of value asset, and is treated by the entire society that way. And then once it's a store of value asset, it can become the medium through which you settle trade. It can be, if I know that you're going to store your value in Bitcoin and I want to buy something off you, I might offer you just, hey, look, here's some Bitcoin
Hmm.
because I know that's what you care about. And that's what I care about. So it's what I happen to have as my savings also. So then you start to, increasingly become the medium of exchange that's preferred because people store their value in that asset already. And then once everything is priced in terms of that asset, it's the unit of account for that civilization. So that's the path-dependent emergence of monetary properties through these stages.
Where do you think we are in that process?
Yeah, I think that we are early in the store of value stage, and these steps are not equal. I think the vast majority of the time and value accretion happens during the store of value transition, where I think everyone would already recognize Bitcoin as a digital collectible. Like if you asked anybody on the street, "What is Bitcoin?" They'd say, "Oh, it's Beanie Babies for internet people,"
Yeah.
right? Like that's already recognition of that role. But what Bitcoin maximalists, where we're at, is like I store my value in Bitcoin, and that's because I view it as the best store of value asset in the world, and I believe that's because it is, right, and that's based on years of research and looking into it. And I think that increasingly the world is waking up to those economic realities. Bitcoin isn't asking for adoption; it's imposing its reality on the world. And you can choose to accept it on its terms and adopt it and benefit from its properties and its supply schedule over time. Or you can resist it and ignore it and not benefit and lose out because others do benefit. And how much of the world has actually adopted Bitcoin as a savings technology?
Hardly.
Yeah, you're
Hardly.
you're looking at Bitcoin Twitter. You're looking at how many Bitcoin maximalists are there in the world? How many people have over 50% of their savings in Bitcoin? I don't know, a million people, maybe.
Yeah.
Maybe
Well, we
it's
don't
10
even
million.
have to go to 50% because if we just say, how many people just own it, and
Yeah.
that's borderline 100 million or so, right?
Yeah.
I know there are other numbers floated around, but 100 million is a pretty sort of safe number.
Right, and even if we use that number, that's what? That's a 10%, 1%. That's 1% of the world's population, roughly. If you use that, what I think is not an accurate reflection of true adoption as a store of value asset, but instead, I guess that number represents the people who have 1 to 20% of their value in Bitcoin, right? Like 100 million people, something like that. But But if you have really reckoned with Bitcoin and have reached a place where you think, it's the marginal use of your value is best in Bitcoin, then you become a Bitcoin maximalist. And I don't know, there's like a million of us at most. So, divide that 1% by 100. Anyway, so if that's where we're at in the bell curve of technology adoption, that puts us, at the very left edge of true adoption of Bitcoin as a store of value asset. And that means most of the world is still on its way to this realization that I think Bitcoiners have already reached, that this is the store of value asset for the 21st century, that you're going to wish you had a
it's
large
the easiest
allocation
use
to.
case to understand. First of all, people understand scarcity intuitively. If you just tell somebody there will only ever be 21 million Bitcoin, that's it. And they will have questions around how that can be enforced. And once they build confidence around that, they know intuitively the value of scarcity, verifiable scarcity. And so it's not a hard sell if they recognize there's a problem in society with inflation. And most people recognize that. They might not call it inflation. They might call it the cost of living is going up. Yes. I mean, that's universal acknowledgement right now. No one thinks it's not going up. It's always going up. And then it's a question of, well, there's this thing, Bitcoin. I mean, that's been the most successful angle that I've had with people, male, female, young and old, that they understand that immediately. You anchor it into something real in their world, which is the cost of living. And it's like, you know what that does to, your savings? Yes, exactly. So here's this thing that they can't print more of. And we're in the early stages of adoption. So what happens when there's more demand for something that you buy now in 10 years' time? And you can relate that. I relate it typically to real estate.
The hard leap, though, is to go from, yes, Bitcoin is valuable because there's a finite number of them, to Bitcoin will keep increasing in value because of its properties and because of its supply schedule. And that takes quite a bit of comprehension and also like trend projection and abstract thought.
So someone close to me, bless her, she's she bought in the last cycle. We both bought together, in fact, right? Wrote it up, and we saw what happened in the bear market. So we bought around, I think we started buying around 13,000 or something like that. And what was the lowest price? 15.5 on the way down. And we're just like, she never even raised it with me. I would have thought she would panic. Never even raised it. Never thought about it. Got through that bear market, and it's just like, that's, once you're forged in that fire of a bear market, like you're hard steel, man. You're like, nothing's going to break you after that. And so like the hardest thing is for people to ride through one bear market. Even a drawdown of 30% will help you prepare. Because, we look at the news in traditional finance, if there's a day of like a 3% drawdown, one single day, it's chaos. Like the newspapers are screaming, pensioners, like you look at the boomers checking their portfolios, 3%. God forbid if it should be 5 or 6%. They'd be calling for Fed intervention. And we're not even exaggerating. If there was a 6 or 7% down day, like they'd need a comment from the Fed, right?
Right. And they'd name it something, Black Wednesday.
Yes, they do. They do that. And so we had a 10% day on October the 10th, 10% down day. It's almost like the Pico top.
Yep.
Have you got an idea or a thesis on why you think we've seen this 50% drawdown?
Yeah, it's a good question. Increasingly, I think we may have been in a bear market for the last 14 months and we didn't even know it.
But technically, you need to explain that because technically you can't make a new all-time high and be in a bear market. So explain what you mean. And I get the feeling you're referring to overall sentiment rather than technical comment, right?
What has probably the biggest influence on my thinking there is if you were to look at the Bitcoin chart priced in gold or the Bitcoin chart priced in like the S&P or
Mhm.
some other index. It's not dollars.
Relative to another liquidity sink, right?
Yeah,
So-
relative to yeah. So the Bitcoin priced in gold peak was December 2024.
Mhm.
And if I think back to that time, that was peak sentiment. We had the Michael Saylor's yacht party,
Yeah.
the 100K party at his mansion in Miami. That
Sentiment was stronger around 100K than it was at 126. We
Yeah.
felt like at around 126, oh, this is warming up.
the sentiment there, the conviction was 2025 is going to be a great year. We're going to go to 250, something like that, in 2025. I felt that way. Everybody felt that way. And it was total confidence. And then, what we saw over the course of the year was sentiment kind of faded away.
Mhm.
We had an all-time high in dollar terms in October, but in gold terms, we were in a bear market already. It was heading down quickly. And that's because gold did great over the course of 2025, an incredible year. And I think possibly dragged up Bitcoin with it in dollar terms. So, I think, historically people would look at a top and say, okay, a year from now, we're going to bottom. But if you think about the sentiment flow, as historically the sentiment has taken 14 months to go from the bull market peak to the bottom, and that would be from December 2024 to nowish, right? Or a month ago when we briefly wicked under $60,000 per coin. It's quite possible that was it, and everybody's thrown off because we had the all-time high along the way in dollar terms.
We've also had two separate bull markets in two different asset classes. So AI, probably would have taken a lot of attention.
Yes.
Yes.
I think
Mind
it's
share.
a huge part of it.
Huge amount of speculative money. Maybe that was a good thing for Bitcoin, to be honest, so that we build a more sustainable, perhaps you might call it a more secular bull market rather than something that just sort of goes parabolic for 6 months and then goes bust and come back in 4 years.
Yeah.
So we might see.
And with Saylor stepping in too, and the scale of bid.
So I want to talk about that.
Yeah.
Okay. But I just want to finish this last point.
Yep.
I posted a chart the other day that showed that we are, in 2 years, we're at the same price point now as we were exactly 2 years ago. And so we've gone up and we've gone down.
Feels
and
a
now
lot
we're
worse
sort of,
now.
Yeah, it does feel a lot worse. Anyway, there's quite a bit of euphoria. And just thinking back, the first time we broke 100K was a move from around about 65, 70K. So that was kind of like a 50% move up, right? Whereas from 100K to 126 is really not that much of a movement, right? So not enough to get people excited. But we had this AI boom where people were making 5 to 30x on their money in the space of 6 to 12 months. And so that took a lot of the speculative fervor and attention away from Bitcoin. And essentially we just had a consistent layer of adoption that drove the price. The ETFs have been a wild success. And then we've got Saylor in the background sort of iterating through a number of different preferreds. They've moved away from convertible bonds, and they've been iterating these different forms of preferred shares. And I think they finally really, hit the mark with product market fit in a really, I don't think people understand how wildly successful Stretch has been.
Yes.
Just yesterday, they announced a purchase of more than $1 billion in a bear market. We're not far off the bottom of the bear market after a 50% drawdown. $1 billion buys for Strategy were a thing of, bull market exuberance, extra attention, all the rest of that. The idea that they could do this not far off the bottom of a 50% drawdown tells you something profound has changed. And I posted that yesterday. Something's clicked.
Yes.
And Bitcoin's never going to be the same.
I fully agree.
Can you speak on that? Tell us about that, because this is your business as well.
Yeah. So last week, the Stretch seemed to, finally click for a lot of people. Incredible volumes day after day, new record high of volume traded for Stretch.
Tell us what Stretch is first.
So Stretch is a preferred equity instrument. It's a very clever wrapper. That's basically it's a bond. It's a debt obligation that's wrapped up as an equity. So you can buy it on you can buy it on the market. Um, Very clever. What it offers to the investor is 11.5% a year, paid out monthly, forever. So you hand over $100, and you're going to get $11.50 a year forever. So it's a perpetuity.
But it's a variable interest rate, right?
It's variable, so they can move it up and down by 25 basis points at a time.
Mm-hmm.
But at the moment, it's at 11.5, and I think that it's the iPhone moment for Bitcoin Treasury companies as a concept, and as the plumbing of hyper Bitcoinization. And we can unpack all that, but it's an unparalleled value proposition to fixed income investors. If you're a fixed income investor, you're used to getting bond yields 4%, maybe 5%. Maybe you go out on the risk curve and you get some junk bonds from some sketchy companies that are paying like 12%.
But for a long time they were borderline zero, right? Like really low, I should say,
yes.
Not zero. But
until a few years ago, the risk-free rate was around zero, and now it's around 4%.
And in some parts of the world, so Japan in particular, because there's a Bitcoin Treasury company there called MetaPlanet that's sort of working their magic over there. They
Still
had
50 basis points, 0.5%,
and just recently off zero, right?
Yes,
yeah.
So that's very fertile ground for this strategy to work very well. So if you're a fixed income investor, what you're focused on is like, what kind of income can I get to live my life as a retiree, or whatever. It's the bond portion of your portfolio if you're not a retiree, and you're used to getting 4 or 5%. Risk adjusted, you're getting mid-single digits, no matter how far out on the risk curve you go. Like if you get a junk bond, risk adjusted, still mid-single digits. And then along comes Michael Saylor, who says, I have an extremely over-collateralized balance sheet, and I'm good for paying out 11.5%. The credit rating agencies might not understand it yet, but this is actually very low risk from the perspective of a fixed income investor. But I'm willing to pay 11.5% because I want the dollars so that I can buy Bitcoin, because our thesis, as a Saylor's thesis and strategy's thesis, is that Bitcoin will appreciate at 29% a year on average for the next 20 years.
Yeah. So give me your money. I'll give you 11.5% because we're going to buy something we think is going to grow at 29%.
Yes.
It's the same thing that people do when they take out a mortgage to buy a house, right?
Yes.
You give the bank their interest rate. You collect the upside when your house appreciates. It's exactly the same thing.
Great example. So that's it's what Pierre Rochard described as the speculative attack for Bitcoin in 2014, and the earliest recognition of this dynamic was that in 2014, and then Saylor kind of stumbled into this once MicroStrategy in 2020 put their treasury into Bitcoin. Then they figured out we can take on debt and buy more Bitcoin, and the Bitcoin value will outpace the debt obligation. So it's a winning proposition. And they've been on a 5-year journey to figure out more and more perfect ways of debt financing. And now they've arrived at Stretch, which we've seen from the volume, the demand is an incredible proposition to fixed income investors, and it's great for strategy because they can raise as much debt capital as they want and buy Bitcoin with it. And what's, I think, really interesting about it, and part of why things are different now, is because historically, Bitcoin hasn't had an answer to the sort of reflexivity of bear markets and bull markets. When in a bull market, everybody wants Bitcoin. Everybody wants more exposure to Bitcoin. Things get out of hand, right? And they go up a lot in value. And in a bear market, nobody wants exposure to Bitcoin. And so it totally dries up. Everybody wants out, or at least the tourists want out.
Yeah.
And who's the bidder? When nobody's interested in Bitcoin exposure. But now there's a bidder because Saylor has unshaken conviction. He's just as convinced that Bitcoin is the best asset in the world.
Just to put that into context, he bought, I think, just over $1 billion yesterday. Oh, sorry, he bought it throughout last week.
Yep.
But he announced it yesterday. That would have been a massive purchase in the last cycle for Strategy.
Yes.
And now he's doing that in a bear market.
And funded mostly by selling these debt obligations of Stretch. So, people may not be excited about, investors, institutions, and individuals might not be excited about increasing their Bitcoin exposure right now. But fixed income investors always want 11.5%.
Yeah.
So they're willing to hand over capital. And Saylor is, unbothered, still high conviction, and knows that now is a better time to buy Bitcoin than at a local peak. So he's taking that capital and buying Bitcoin in the bear market, helping to create the bottom.
Yeah.
Quite possibly, right? Like if in hindsight a month ago was the bottom, it will be in no small part because of Saylor and Strategy and the amount of a bid that they've been providing to the market. And also the psychological impact that has on everybody else.
Yeah.
It's hard not to see, they bought 22,000 Bitcoin last week. It's hard, and they announced that yesterday. And it's hard not to see that and be like, shit, I want to, this is going to make the price go up, and it makes me bullish right now.
Wasn't their total enterprise value about $1 billion before they started adopting Bitcoin?
Yes.
And now I know it breached 100 billion at one point. And what is it now? 60-ish?
Yeah, 60-ish.
Yeah. So 60x in 5 years.
Yep, that's right. And that's the result of a Bitcoin Treasury strategy.
Yeah. And I think the other thing that's quite fortuitous, like they've been iterating these preferreds for a while, and it's quite fortuitous that they've sort of come across this formulation for Stretch that's really hit the sweet spot for the market in this part of the cycle, because what they get to do now is they get to buy a whole bunch of Bitcoin at the lows, and then they compound the benefits as the price rises, so they don't have to buy at the top, ride through a cycle and wait another 5 years before you start seeing, some real significant gains on that. They're going to almost see that immediately. So that's going to mitigate some of the risk that perhaps some investors might have.
Yeah.
Some concerns about the risks investors might have when they're asking. It's like, no, we're buying at the bottom now. So we're going to ride this up. And that's going to, underwrite all the dividends that we're going to be paying you anyway. So
yep. And that kind of segues into what they've landed on is the amplified Bitcoin model, right? Like this securitized equity exposure that is MicroStrategy as a stock that provides, not just when you buy a share of Strategy, you own a slice of their Bitcoin balance sheet, but you also own a slice of the future. How much Bitcoin per share will they be able to add into the future by selling Stretch and using those proceeds to buy Bitcoin, which increases the amount of Bitcoin per share. So that's the value proposition of an amplified Bitcoin strategy. And I think Bitcoiners in general are still, everyone's amazed at how much Saylor is buying, but I still think that people are undervaluing how huge this is for Bitcoin.
Okay, this brings us upon, I've been an admirer of your work for at least, 5 years, all the time that I've been in. I think you've been around for all that time as well, haven't you? So, I noticed you quite early on. We've mentioned the article, superb article. I recommend everybody go and read. But another piece of work that you've done is the analysis of, sort of mapping out what the global asset values are like and the different classes, and try to put a number on what the sort of total addressable market for Bitcoin is. And so we've come to the point where, we're talking about Saylor's Stretch hitting the market sweet spot. And, in theory, it's infinitely scalable, right?
Yes.
But where is the demand coming from in your analysis? So can you sort of, first of all, just lay out the analysis that you've done
Yep.
and how the global asset sort of registry breaks down by classification and value?
Yeah. So Bitcoin's full potential valuation is the piece I put out a few years ago, and then Saylor has adopted it as the basis of his valuation model. The idea there was, I come from management consulting. When you start a project, a common exercise to start with is, what is the addressable market here, and how much of it can we capture, right? Like whatever the question is there. Like usually it's, if we were to start operating in Mexico, how big's the market and how much of market share could we capture? And in the case of Bitcoin, this analysis didn't exist out there. So I thought, okay, I'll take a crack at this. How big is the market and how much can Bitcoin take? And I quickly realized there just wasn't a singular view out there of how much value is in the world. So then I had to build that picture. And the reason that didn't exist is it's kind of an impossible task, impossible to get it precisely right. But you can get it, roughly right. You can triangulate, you can take various estimates and average them out, and come to a picture that's reasonable. And when I did that, the number now is $1,000 trillion of value in the world, and that's split between the various buckets of real estate. There's equities, there's money itself, and then there's bonds and fixed income, and then art and gold and Bitcoin. And when you take stock of Bitcoin's total valuation in this landscape, it's still 0.2% of global asset value. And I think that was a big part of why that piece became quite popular is, nobody had really put a number to just how small Bitcoin is relative to everything else, because we didn't have a denominator, and that piece kind of created a denominator. And think about how Bitcoin is digital value and everything else is analog value. Everything else is traditional capital, physical value of some kind. And in the increasingly digital world, how much value will digital value end up taking? What market share will it end up winning? In that original piece, I ended up going through each of the buckets and saying, well, I think Bitcoin will take this percentage from bonds and so on, and arrived at Bitcoin eating 20%. Full potential evaluation of Bitcoin becoming 20% of global asset value.
At some point.
Which would from today mean 100x relative growth relative to everything else. So if
that's a key point.
Yes.
So you just break that down for us, because people heard the word relative, but explain what that actually means in numbers.
So using your house example, like if you bought a house today for $1 million and the same kind of asset inflation occurs over the next 10, 20 years.
Yeah.
And 20 years from now, that house is $10 million, but it's still the same purchasing power as it was today.
If all the other houses are $10 million, your house hasn't really increased in value. It's just, if you sell that, you're going to have to buy another house to live in that's going to cost you the same.
Yeah.
But if your house outperforms the market,
yes,
it was, and it's worth $12.5 million, that's the profit you'll effectively have made.
Right. Yeah, exactly. So in this scenario, if you have a house that goes from 1 million to 10 million, that's treading water, but 100x on top of 10 million would be 100x relative performance. And that's what I think Bitcoin will do over the coming decades.
And so your analysis right now puts a particular figure on it, but by the time Bitcoin fulfills its, I guess, the market opportunity, if you put it at 5% or 2% or 1%, whatever, by the time Bitcoin is worth as much as 10, or you said 20%, didn't you?
Yeah.
By the time Bitcoin is worth as much as that 20%, that 100 trillion that segment of the market might suddenly be worth 500 trillion.
In nominal terms.
Yes, in nominal terms.
Exactly.
Yeah. Because a lot of people, when they think about Bitcoin, they think, okay, what could the price be?
Yes.
In nominal terms, right?
And cleverly, that's what Saylor took my model, said some very nice things to me about it, started using it in his presentations. And I didn't fully understand why, but then he put out a Bitcoin valuation model, setting a point in time in the future and using the same framework of mine. And he arrived at a number of 20 years from now, he thinks Bitcoin will be worth $13 million per Bitcoin.
Mm-hmm.
Importantly, in that, all assets have 4x'd in nominal value,
Mm-hmm.
right? So there's like a 4x inflation built into that.
Yeah.
That would mean 20 years from now being worth 7% of the global asset landscape. And he thinks that, end state for Bitcoin is as much as 50% of global asset value. I put it at 20%. I was frankly being a little conservative. And he puts it as much as 50%, which would be to say that 50% of the world's asset value is just looking for the best store of value asset. And Bitcoin is, to use the old phrase, a infinitely expandable blueberry that can satisfy all of that, store of value demand, because it is a perfection of store of value fidelity through time, because there's no supply growth.
So, okay, so we've got this preferred instrument structure.
Yes.
Which asset class is that targeting?
Yes.
Most.
So this is the thing that I think people haven't wrapped their heads around in general about Bitcoin Treasury companies yet. So if you look at that chart of here's where all the value is, the big buckets that stand out, real estate's big, bonds is really big, 300 plus trillion. Money is big, 130 trillion plus, and then equities, 130 trillion or so. Those are big numbers. And what a Bitcoin Treasury company does first is it represents, a securitized Bitcoin exposure. It's an equity that is a balance sheet built on Bitcoin. And, that balance sheet, in theory, will grow at the value of Bitcoin's performance over time. So if that's 29% a year, the value of that balance sheet grows at 29% a year, plus whatever growth in Bitcoin per share that company is able to achieve.
Mm-hmm.
That's pretty incredible for, compared to other stocks. In the UK, over the last decade or two, the average performance on the LSE is 6% a year. So, if that's what you're able to achieve, 29% a year compared to that, that's very enticing to equity investors. So you might get an increasing number of increasing amount of capital allocating from traditional equities to Bitcoin balance sheets,
Mm-hmm.
Bitcoin Treasury companies. That's the first step of a Bitcoin Treasury company. And now what Saylor has perfected, and this is the reason he really was using my chart all along, was it's a map for where are the pockets of capital that you can tap into if you can offer a superior product to that capital. So the bond market, that's fixed income. They're used to getting 4 or 5%. And now Saylor's designed, reach this end state with the preferred equity instruments offering 11.5. That's going to win market share. That's a better value proposition to a fixed income investor than what they can get with.
So fixed income total size was?
370 trillion at this point.
Gosh.
Yeah. And
just attracting 1% of that in the next 5 years.
And Saylor,
is phenomenal.
And this is what Saylor, this is how Saylor thinks. And he talks about it. I was at a dinner at Strategy World where, he was doing the quick math in his head of like the addressable market is, 100 trillion here, 300 trillion there. He's thinking about that chart. And he knows that he has a better product than anything else out there for fixed income investors. So what's to stop them from getting 1% or 5%
mm-hmm.
of the capital there and ingesting it into Stretch and using that capital to buy Bitcoin.
Mm-hmm.
And then what you're talking about, if it's 1%, you're talking about $3 trillion of capital that Saylor is going to use over the next decade or two to buy Bitcoin.
So the current market cap of Bitcoin is 1.4,
Mm-hmm.
just over,
Yes.
right?
1.4 trillion.
Yeah.
And we're talking about
3 trillion.
3 trillion.
It's just 1% over 5 years,
Yep.
right? And there's a multiplier to that. Do you know what the multiplier is, Jess?
Well, yeah, that is a subject to debate.
Give us a range.
Yeah.
We don't have to enter into any sort of conjecture. What's the range that people?
I think it's sensible to be in the 1 to 4x sort of.
Just depends on
range.
the part of the market cycle as well. Doesn't it?
And then that all averages out to something in 1 to 4x. If you're buying at the peak enthusiasm when there's the fewest sellers,
Mm-hmm.
an incremental dollar will drive up the price the most.
Yeah.
And then it all kind of washes out and averages out over the course of 4 years to something like 1 to 4x.
This is one of the things I don't fully understand about various Bitcoin models that are around. And I understand it. They're really good. I get it, right? They're really intelligent models, real science behind analyzing the data to project forward. But Bitcoin is digital. Like there are no barriers to capital allocation. Quite literally, when I say no barriers, I mean, assuming someone wants to do it, they can just do it, right?
Yep.
Bitcoin can scale infinitely. If someone wants to buy, they can buy, right? There will be market supply that will come, that will meet the demand at various prices. And that's why I'm like, okay, I get it. If all things continue along a certain sort of trajectory, that's what we could expect. But like, if Trump really does wake up tomorrow and says, okay, we're doing it, let's get $100 billion of Bitcoin, right? And we want that done by the end of the year, right? They could do that without really, right? And then suddenly that triggers the sort of fixed income market, because they say, if the bloody White House is the US government is buying $100 billion, I should at least have half a point in there or something like that, right? So like things can move very quickly. I know that the theory says that, well, it won't happen until Bitcoin is ready for that to happen. But actually, it can happen.
When we're talking about MicroStrategy, we're talking about one company.
One company, yeah.
And
I mean, the Ford Motor Company, I think the last time I looked at it, they had almost as much of their market cap in cash. Last time I looked at it, something like that.
Yeah.
They had tens of billions in cash. Their market cap was barely 40 million. And it's gone south since. So they may actually be at the point where they've got just as much or more cash than their market cap.
Yeah, and that's a problem that Saylor solved for MicroStrategy 5 years ago by figuring out I'm sitting on a melting ice cube by holding dollars. True inflation is more like 7 or 8%, not the 2-3% that we're told it is.
Here's the Ford Motor Company, right? I posted this 2024 November. MicroStrategy had just broken the $50 billion market cap and became worth more than Ford Motor Company. Ford had lost at that point 60% of its market cap since 2022 and held $26 billion in cash, about 65% of its market cap. Now, let's have a look at what Ford Motor Company is worth right now. Because I don't think their share price was going in the right direction.
In a funny way, like if you're holding 65% of your market cap in cash, you're a dollar treasury company.
You are, aren't you?
With a small operating business relative to your total value.
That's a great way to put it. So, and I've got that. Okay, so I've got it. So I posted that in 2024, and the stock went up and it went down. So that was when I posted that. It was November 2024 at about $9, and now it's $10.18.
You're treading water.
Right? So in 2 years, a year and a bit, right? Year and a half. They're basically doing nothing, and that's bouncing off a low as well, right? And what's the stock market done in that time? it's been booming, right?
Booming.
So like there's not much value being ascribed to Ford's strategy, and they're holding on to that cash for dear life. They're in the position that Saylor was, because when Saylor's company was 500 million in cash, 500 enterprise value, right? For the business, I should say, and 1 billion enterprise value. And so they're in a very similar situation where their cash is still about 65% of their market cap. And they really have no plan. Like, does anybody really think Ford is going to overtake Tesla in the area of electric vehicles, which is where most of the profit's going to be in the future? No. And they're running the risk of becoming the next Nokia.
Yeah. Or Blockbuster or something.
Yeah, Blockbuster. I mean, we all look back wistfully at, we loved the Nokia phones. They were just so durable and reliable and all that.
That was my first phone.
Right? You charge a battery and it lasts for like 5 days. Nokia was a really beloved brand. People really liked Nokia. And why aren't they making smartphones that compete with Apple? Why can't they?
Didn't innovate.
They just
stagnated.
They just didn't. And I'm almost certain now, like, if they could get the money and the talent together and they said, we're launching a phone, people would almost like nostalgically support it.
Yeah.
Right? And but they're not doing it. And so, Ford Motor Companies, they're making cars that don't make them any money. The enterprise value is 65% cash. But they have a board of people who are just very conservative.
Yep.
Not quite yuppies, but I'm sure they're the yuppie equivalents of boomers. The people who were yuppies in the 80s are now sitting on the board of Ford, right?
Yeah,
and so they just can't bring themselves to acknowledge they need something like Bitcoin yet.
Yeah, and the psychology there on a committee is don't screw it up.
Yeah.
Right? And versus what Saylor, the position he was in, he had enough voting power that he had singular control of what they were going to do. So all it took was him understanding Bitcoin and having conviction, and then he could make the decision on his own. And that's what Bitcoin adoption has been to date, because it's still hard to understand Bitcoin and have enough conviction to buck the trend of what you're told you should do, which is a 60-40 portfolio and trust the dollar, right? So that's why Bitcoin adoption to date has been individuals who were able to be free thinkers and come to the conclusion on their own, and allocate their capital because they had sole discretion of doing so. And that's why institutions are slow to adopt Bitcoin. And I feel like Bitcoiners don't understand that enough, because people assume that institutions are the smartest things out there, but they're committees. They're inherently committees, and there's career risk in being wrong.
Career risk, the cultural pressure to conform.
Yep, and not do anything out there.
Yeah.
Yep.
Yeah.
And that's why Ford is not going to be able to act. They will sit on their melting ice cube and lose their opportunity to re-energize their company as a Bitcoin treasury company.
It's easy for us to sit here and make sense of, the decisions that a company like Ford would make. But I'm like, are they really just sitting there going, I don't want to mess this up. I've got like another 5 years to retirement or whatever.
Yeah.
And
yeah.
And if I mess this one up, I might get kicked off another board.
Right.
Because, these directors, that's what they do, right? They sit on multiple boards, and it becomes a profession almost at a certain stage of someone's career.
Yeah.
You become an accomplished executive at some point, and then when you're ready to retire, you just go and sit on 2 or 3 boards, and that pays for your retirement. So it's just like, what an absolute pity it is. But that's why it's always the outsiders who are first, right?
Yes.
They're not invested in the system, and so they're looking for a solution to a problem. Or they're buying drugs off Silk Road, for example, right? Still sort of that renegade mentality. But one of the things that really does surprise me is though, and we see it in the Bitcoin space because they're now parts of our community, these people. But like, it's that singular person in the entire company. It might just be like one of these massive banks, and he's like, and we had Greg Foss, for example. We got James Lavish. These are guys are from traditional finance. They go, yeah, we got it early on, but like we couldn't do anything internally to push the bank.
Yep.
But like, there's always that one person in the corporate world or in the corporate team, and they're a Bitcoiner, but they know they can't mention it, they can't talk about it, and
that's part of what Bitcoin treasury companies help change.
Yeah. So tell us about that, because we haven't mentioned it yet, but you're involved in a British Bitcoin treasury company. Tell us about that.
Yeah. So the thesis there is what works for MicroStrategy in the U.S. is true of any company. It's true for any individual, right? Like, if Bitcoin is the best performing asset into the future, you want to hold that. And if you think about a company balance sheet, the default is to hold 0 Bitcoin and instead have your treasury in pounds or dollars. And a Bitcoin treasury company is saying, nope, this is the best performing asset. We want to accumulate as much of that as possible. And that's true in every capital market in the world, right?
Mm-hmm.
So true for any company. And now what Strategy has pioneered is a model for a particular kind of Bitcoin treasury company, which is this amplified Bitcoin model, which is how do you increase Bitcoin per share over time by using capital market tools to fundraise equity capital or debt market capital. And so that's to say, selling common stock like MSTR, or raising debt capital like what Stretch is doing for Strategy. So those are the two instruments that Strategy have now kind of narrowed in on as the winning.
Hasn't Saylor now cracked the code such that everyone should just be issuing their version of Stretch?
Basically, so my thesis personally is this is going to happen in every capital market in the world.
Mm-hmm.
And it's going to be winner take most for this particular strategy in every capital market in the world. Because, in the US, like, where are you going to get your 11.5%? Who are you going to trust to give you that? If you're the fixed income investor, who are you going to hand over your dollars to
mm-hmm.
in exchange for a promise for 11.5% forever? You're going to get a Strategy for that, because they are the biggest, the most credit-worthy balance sheet out there. So they're going to be the ones hoovering up a disproportionate amount of the world's fixed income capital mm-hmm. to buy Bitcoin with. But in the UK, it's a different regulatory regime. You're under the FCA. There are, and that debt market has some access to, you could go buy Stretch, then you have to pay withholding tax on it, because those are the rules. And for a UK-based company, that's not the case. So Smarter Web Company is listed on the London Stock Exchange. We have 2,700 Bitcoin roughly, and started 10 months ago. And so we're the largest Bitcoin treasury company in the UK, and definitely the most liquid. And we're sort of following the MicroStrategy playbook. We're trying to be strategy for the UK, and that means kind of following the Metaplanet pathway that they've blazed in Japan, doing the same sort of local play, right? Like they are going to be MicroStrategy for Japan, and they're going to be that amplified Bitcoin entity for how do you get Bitcoin exposure and grow your Bitcoin ownership over time by using these capital market tools. So that's what we're doing in the UK, and we're well on our way. And Saylor has created this perfect blueprint for how to do it.
Mm-hmm.
And then the question is how much capital in the UK will be interested in these kinds of products?
Mm-hmm.
It's the second most important financial center in the world is London. And there's a lot of capital here, especially in the equity market and also in the money market. This is the international banking hub for most of the world. So 10% of the world's money is in the UK. And it's, maybe it's parked in a bank, maybe it's parked in a money market fund, getting a few percent. But that's what Stretch speaks to fixed income investors and also money holders.
Mhm.
So, corporate treasuries, people with money in a bank. You could be putting that money to work, growing your money at 11.5%. That's the value proposition of Stretch. That's true anywhere, right? It's true in a place where 10% of the world's money is parked, getting at best a few percent.
Aren't
of
interest
returns.
rates here lower than the States?
Slightly.
Slightly. So you might not have to pay as much to get the benefit of the same Bitcoin, right?
Yeah, it's an open question.
Right. Well, let's see what the market will bear. So is that on the agenda for you guys?
Yeah, I think it's the goal for any Bitcoin treasury companies to get to that stage of maturity where you have the liquidity with your stock and the scale of shareholder community.
So tell us why that's important. Why is the liquidity of the stock, the underlying stock, important for you to be able to then issue preferreds?
Yeah, so there's a few sort of inputs that are necessary. That's one of them. You need to have a sufficient scale with your balance sheet, such that you can go through the process of pay the fees to list an IPO. A Stretch was an IPO in the US.
Yeah, they all have their own tickers, right? All the preferreds have their own tickers.
So it's its own thing, and that's a multi-million-dollar process. And then you have to seed that market. You have to have enough investors willing to get that market to scale, such that and then get enough trading volume in that market such that you can issue more. And that there's enough demand for that product that it can trade at a premium that you can then issue more, which is what Strategy has not now gotten to the place where that's what they're able to do. It took 6 months for them to get this market, introduce this product, IPO it, get enough liquidity that it now trades consistently at a premium. And then they're able to issue more and raise capital through that. So, you need a few things. You need enough scale. You need enough demand from the market, enough confidence in the company that people are that people believe you're creditworthy and you're good for it. And then the other side of it too is the stock needs to be valued and have liquidity such that you can run both sides of the strategy. You can raise debt capital and you can also raise equity capital. So that you can scale.
Because you pay your dividends with the equity, right? Sales of equity.
You can pay your dividends with any source of capital.
Oh, you can. Okay. So you're not obligated with the funds you raise from, for example, if say to sell Stretch, it's not obligated to spend all of that just on Bitcoin.
Correct. Yeah, it's working capital.
I got you. All right.
And so, it's financial engineering. It's
so that can scale infinitely without even diluting.
Yes.
So
and so what they've been doing is they've been selling their common stock 2-to-1 with Stretch. Last week was different. Last week was mostly Stretch. And in doing so, assume it's all 2-to-1. You get to and you sell an infinite amount at that ratio. You end up at a 1.5x amplification ratio, which is really leverage ratio. So 50% leverage.
But why would you? Why would you sell your equity if you can just raise preferreds?
Yeah,
raise capital through preferreds.
Yeah, it's a good question. I think they're just trying to scale. The larger scale you are, the more creditworthy you are. They're also trying to shrink the size of their existing convertible notes. The hard and fast
as a percentage of their asset base, their balance sheet. Okay, yeah.
And yeah, this is the long road to reaching 1.5, 50% amplification ratio. They could just sell Stretch and get to that faster, but this way they're buying more Bitcoin and they're scaling their balance sheet even more. And in doing so, they're growing their share count along the way. But
wow. Okay, so that's really interesting. Where do you think you guys are along the process on the path towards issuing preferreds?
Good question. I think that we hope to get to that place, and we think that we're at the size where we could do that now, if it's right sized. If it's percentages.
Yeah.
And so we're excited about that possibility.
Okay, so we'll leave that there. I know there could be some market sensitive bits of that conversation, so we'll leave that alone for now. Tell me about the conversations that you've been having with various institutions in the UK, because one of the things I'm fascinated about is we seem to be so much more conservative. London has such a historic pedigree of being the center of global finance, global trade, and yet it feels like we're in a very suffocating environment when it comes to Bitcoin legislation, adoption, institutional receptivity to any new ideas. So tell me about your experience. You're an American, right?
Oh yeah.
As an American in London, working at a British Bitcoin Treasury company.
Yeah, well, I think the UK is behind on Bitcoin.
Mm-hmm.
We were talking before. How many years behind? I don't know, 2, 4, something like that.
I would
2 to 4 years?
I would say at least a cycle behind.
Yeah,
Yeah,
that feels right.
Well, when you have a look at what the United States has actually done, they've got the White House behind it. There's legislation being pushed there. They have a national strategy. They have a crypto czar, so to speak, or secretary of crypto or something like that. They've got ETFs from the second largest fund manager approved, right? They got Morgan Stanley, one of the largest banks, about to issue its own Bitcoin ETF. You've got Strategy, Saylor's company, that's a pure play, virtually, Bitcoin Treasury company at a 60 billion valuation. So you've got all of these things happening there, none of which are happening here really. Like, I know your company's probably the largest Bitcoin Treasury company. There's BHODL as well, which, I have a small position in BHODL. So but these are all really they don't come close to even like the 4th or 5th sized Bitcoin Treasury company in the United States that most people listening to this have probably not even heard of.
Right.
So we are a long way behind.
Yeah, I think that's a good way to think about it. Probably a cycle behind, maybe even more.
Maybe more.
And I think part of that is there's something about the UK culture that has. I think your press is particularly unkind to Bitcoin
and revel in it too. Like they really revel in it.
Quite a browbeating sort of approach to mocking Bitcoin.
Well, I think what we spoke about elite and their the pressure to conform or their disposition to conform to groupthink as well. Here there's really only one path. The elite culture is Oxbridge, right? Mm-hmm. At least in the United States, you have more than a dozen universities, right? In a dozen states, more than a dozen, right? There'd probably be 20, 30 elite universities.
Yeah, maybe 20.
Yeah. So here we've got 2.
Yeah.
I know the LSE, as British people listening to this will know the joke in Yes Minister. It doesn't really count. So Yes Minister was not a long-running series, but a very famous series of following a politician's ascent to become prime minister. Uh-huh. And the joke was that all of his advisors were like Oxbridge, and he went to the LSE and they looked down on him as a result of that. So it's like, okay, nice. It's a bit it's an inside joke for the people listening here. So I think the elite pathway is very narrow here.
Yep.
And so there's not much room for diversity of thinking.
And it's been very interesting then to be advocating for Bitcoin, in the finance sector in the UK, and having conversations with institutions and banks, brokers, and across the gamut of service providers that a public company interfaces with, and everybody's curious and wrapping their heads around like, why is this happening? What do they see? Are they crazy or are they right? And of course, Bitcoin's volatility makes it seem that you're one or the other at any given time. Mm-hmm. When Bitcoin's down, it seems like we're wrong. When Bitcoin's trending up, it seems like maybe they're onto something. And the press kind of reflects that as well in their coverage of Smarter Web. So yeah, it's a long-term educational process too of trying to make the case for why this is a good idea. Why holding Bitcoin as your treasury asset on your balance sheet is
What do you think they're receptive to when you're trying to convince them of that?
well, the proof is in the pudding. At the end of the day, like the only thing that convinces the yuppie elite is results,
Hmm.
and that track record grows over time. And part of that's the sort of Lindy effect of the longer something has been around, the more trustworthy it is. It's
Hmm.
going to continue to be around, and Bitcoin benefits from that. We've really kind of, especially in the U.S., sort of turned a corner where it's not going away, and people, even in Wall Street, understand that at this point, or have come around to that mindset. And I think the UK is just starting to turn that corner. Some people, I have a lot of conversations with bankers, and there's curiosity that borders on acceptance. Like, okay, I guess this is a thing,
Hmm.
but they don't. They're not Bitcoiners. They haven't even considered Austrian economics. They come from that same world that I came from, where this is alien to them, and they don't understand why it makes sense because they haven't been steeped in that
That's really
thinking.
interesting because I was talking to the guys from Strive last night. I interviewed Matt Cole and Jeff Walton.
Walton.
Yeah, really good guys, very smart guys. And I asked them, I said, like, how do you go about? Well, what's the nature of the conversation you're having with potential investors? And they're fixed income guys.
Yeah.
Like that's what we're talking to them about. Because they've got SADA,
Yeah.
and that's doing really well, and like they're not even Bitcoin guys, but their interest might be peaked afterwards. So it's like what they're finding is that people are interested.
Yeah.
Their interest is peaked because of the yield,
Right.
and that's what they're motivated by to begin with.
And that's what's so exciting to me
Mhm.
about Bitcoin treasury companies globally, is they are the plumbing of hyper Bitcoinization. So what does that really mean? Strategy is a capital pump that sucks capital out of money market and out of the fixed income market and buys Bitcoin with it. And it's able to do that because it's stuck these pipes into those buckets
Mhm.
and said, here's 11.5%. It's better than anything you're going to get in your bucket. Come with me.
Yeah,
Give me that capital and I'm going to go buy Bitcoin with it.
it's the Bitcoin milkshake theory, right?
Yeah, right.
It really is.
And that's going to happen everywhere in
Mhm.
every capital market because, in the UK, same thing where fixed income investors are getting mid-single digits. And
You need to write that article, by the way. The Bitcoin milkshake.
yeah, yeah, I do. I have a graphic of this, strategy as a capital pump, and that's why Saylor uses that graphic, because it's a map to how much capital is in these different buckets, and he doesn't think of strategy as a capital pump. He thinks of it as a refinery to refine capital into Bitcoin. But I like the visual of a pump sucking capital out of these buckets, and inherent in that mental model is it doesn't matter if that capital is bullish on Bitcoin. That capital can all they need is to be interested in 11.5% or whatever the rate is,
Mhm.
and they will hand over their dollars or pounds to an entity that is bullish on Bitcoin and will use that capital to buy more Bitcoin.
Has Metaplanet issued their preferreds yet? Are they on the game yet?
They have done a pre-IPO round for, they have two preferred equity instruments lined up. They have not yet listed them, and there may be some delay there that, I would have thought they would have listed them by now. So who knows what's going on that front. Hopefully they're able to. I think in the long arc of things, some version of it's inevitable, but who knows what the holdup is.
Yeah, I think they're so beautifully positioned.
Perfect capital market, because
I
as you
didn't
pointed out-
understand what they were doing when they listed. I'm like, is this going to be like a pump and dump
Yeah.
thing? What is it? They're a hotel company? What the
Right.
what?
I didn't understand it either.
I didn't understand it.
And I'm, I talked to Dylan, and he was super excited about it. And it took me 6 months to really be like, oh, I get it. I see what he's doing. A 90-minute conversation with him on the phone where I was on vacation, and it turned into a 90-minute conversation. He's telling me about the strategy, and how awesome the mechanics are for them to run this playbook, the Sailor playbook. And that was about a year ago, and that's when it really clicked for me of this is going to happen in every capital market in the world.
Yeah.
And these companies, the winner take most in every capital market will end up becoming the most valuable company in that capital market.
I was going to buy some Metaplanet, actually. I have no association or affiliation with them for anyone listening and watching. But in the UK, it's virtually, it's so difficult to get access to
exactly
global markets. It's like, what?
And that's part of why there's going to be a homegrown champion for this model in every capital market in the world. And if you were to list out like what's the best capital market in the world to do this, it's the US. What's the second best capital market in the world? It's Japan, because of their rate environment.
Exactly.
And what's the third best? I think it's the UK, because of its history, its positioning, and the amount of 9% by my math, 9% of the world's equity value is in the UK. 10% of the world's money is in the UK. It's the third best market to run this playbook in.
So Japan, they've got a whole generation of people who've probably like 40, 45 years old who've never received any kind of yield for their money.
So the going rate for fixed income there is 0.5%.
Wow.
And so if you're Metaplanet, what they're offering is, I think, 5% roughly.
You don't even have to do that. You could give them 2.5% and they'll take it. Surely.
So that's a 10x better income than you can get with other fixed income products. That's going to win market share. I don't know, but it's possible. That's part of why it hasn't been approved yet. It's like this will blow the lid off of what's happening in Japan.
So they're waiting for market approval.
I guess so.
And I think I may have seen something briefly that said it takes them up to 6 months to get that.
Maybe that's all it is.
And that was maybe around about November-ish, maybe I saw that. So we're not too far away.
Yeah.
We're around the 5-month mark. So, I mean, if they get that approved, wow.
Yeah.
They could be doing what Sailor is doing.
Right. And so, Strategy has 700,000, close to 750,000 Bitcoin. Right now, Metaplanet is 35,000, pushing 40,000 Bitcoin. Smarter Web is about 2,700 Bitcoin. So,
different scales.
Different stage of the life cycle of this playbook. Part of why I'm so bullish on Smarter Web is we have a lot more growth potential.
Yeah.
Just in terms of that, if we keep following the success of Metaplanet and
so the limiting factor for you guys is the liquidity in your shares, which sort of underwrites the ability to issue or to raise capital to then pay the dividends as well.
That's one of the limiting factors. The other is demand for the common stock, and 10 months ago, this was a very hot topic, trend. There was tons of demand. In the last 6-8 months, the tide has gone out completely for Bitcoin treasury companies globally. I was just thinking about
that. Yeah, so like that's a point of contention. I know a lot of people who are bearish on Bitcoin treasury companies. Some people call them Ponzi adjacent, which I think is like, I think not only is it wrong, I think the word adjacent is doing a lot of fucking heavy lifting in that, right?
I agree.
Because it's not a Ponzi at all. It's nothing like a Ponzi. Ponzi's don't have underlying assets, right? It's literally just a flow of new investors to pay old investors through the use of deceit. There's nothing there. There's literally nothing there. At least here, it's more like a mortgage. You're taking the money, you're buying an underlying asset, and paying out the dividend through gains.
by and large, many crypto people are so unfamiliar with equity markets or public companies or even companies.
Yeah.
A balance sheet is foreign to most crypto people.
But there is the point that here's a really interesting point, and I raised this with the discussion with the boys last night. So I'm interested in what you'd have to say. Is like there was, I think a lot of people feel like they've been burnt because they bought at high MNAVs,
Sure.
and we've seen that compression. Tell us about why you think those MNAVs expanded the way they did and why they've come down.
My mental model for the valuation, how to value a Bitcoin treasury company is obviously you have to project forward how much of an increase in Bitcoin per share that company will be able to achieve over your time horizon. Year, 5 years, 10 years, whatever you're looking at. And you can only base that assumption off of recent historical performance in that metric. And in Q2 last year, Bitcoin treasury companies were able to grow Bitcoin per share at an astonishing rate, like 50% a month kind of rate. So what's the valuation of that? You're going to, if that continues, you're going to grow your Bitcoin ownership at dizzying rates. Even if you drop it to 10% a month, it's still outrageous. That's worth paying a huge premium for. And I think that's what was happening. These things are reflexive and recursive. Recursive meaning like that model works best when the premium is high, and it works so well that you can justify paying a higher premium. So it
feeds on itself.
On itself. The reverse is true also. When the tide goes out, it gets so much harder to deliver that kind of growth in Bitcoin per share. They become worth less if you use that same valuation approach. And so, the tide went out. Bitcoin treasury companies haven't been around that long, but Strategy's been doing this for 5 years. So they went through a bear market and then a whole cycle, a bull market that followed. In 2022, people forget, in 2022, Strategy's MNAV was 0.7. And that was the bear market for Bitcoin. And then in 2024, their MNAV was 4x. So, the MNAV is sentiment for Bitcoin, and specifically for Bitcoin treasury companies, which are vehicles to grow your Bitcoin ownership over time. So, Bitcoin treasury company sentiment is downstream of Bitcoin enthusiasm. So in a bear market, everybody's bearish, everybody's doom and gloom about the future for Bitcoin and how much exposure they want to Bitcoin risk. And in the bull market, everybody wants more Bitcoin exposure and more Bitcoin risk. They want to get more Bitcoin. You're willing to pay a higher premium. So, I think that reality remains. Bitcoin treasury company MNAVs are downstream of Bitcoin enthusiasm. Right now and recently, we have been at a relative absence of enthusiasm for Bitcoin. And in the next bull market, that will flip again. I don't think we'll get the same level of MNAV expansion because people got burned. But I think that we will see expansion of MNAVs, and then that makes a Bitcoin treasury company more successful at running its playbook and delivering growth in Bitcoin per share. And so that same feedback loop will happen again if MNAVs do expand. So I take the zoomed out view. I've lived through several cycles of Bitcoin. I've seen the absolute lack of optimism about the future that occurs at a bottom, and then the dizzying optimism about the future that occurs at a top. And I think I know where we're roughly at, in that sentiment pendulum.
You mentioned earlier that you thought that we'd probably been in a 14-month bear market.
Yeah.
How do you see the sentiment right now in terms of where we are?
Yeah. I think we're at that place where if you were to ask the market, do you think Bitcoin will be at 150, within a year? Very few people would say yes. And I think if you were to ask that, the same group, do you think Bitcoin will reach 50,000 in the next year? Probably the majority would say something like that. And that's just always what happens at the bottom. And part of this is, the traders help create the bottom, because when the consensus becomes bearish, they start to, they're paying to short. The funding rates become negative.
Yeah.
And that creates the opposite dynamics from what they want to have happen. It becomes easy to squeeze them and push the price up and punish the offsides traders. So the market tends to go in the opposite direction of what the consensus is in the funding market. And we're there now. Like, funding has been negative in the last few weeks in particular. So the consensus is we're going lower, and that's when you squeeze higher. And now we're mid 70s. We'll see. Maybe we stop here, pause for a while, and then resume. Maybe we go lower. That's possible too. But my pattern recognition is this is how it felt in early 2019. This is how it felt in 2022. And if that's the case, that we're at at or near a bottom, maybe we're 3 months from a bottom, but we're probably in that range. Possible that we've already, I think I would put it at 55% likelihood that we've already bottomed. After every prior major bear market bottom, there's been a multi-year bull market that follows. And that's particularly exciting to me right now, because the infrastructure is now in place from the Bitcoin Treasury company perspective to add fuel to that bull market, to really run it up, because you're going to have strategy buying billions of dollars a week of Bitcoin, and then plus whatever the ETFs do because of enthusiasm.
Well, the ETFs last week bought half the amount Saylor did. I think Saylor, did he buy 1.5 billion?
It was 22,000 Bitcoin.
Yeah, so that's about 1.4, right?
Yeah.
And ETFs bought around 700 million. So he bought twice as much as all the ETFs combined.
Yep.
In a bear market.
Right. And mind you, mining new supply creation is 450 Bitcoin per day right now.
Yeah.
So we're an order of magnitude more from just Saylor and IBIT.
On a really good day, BlackRock was taking in $1 billion.
It's amazing. And so it's possible that we've set up a floor here in large part because of this, the bid from Saylor, which is coming from the debt market, right? Like this is how those instruments matter so much for Bitcoin going forward. Is you're going to have the bid not just from enthusiastic people wanting Bitcoin exposure, but from the debt market who just wants the yield. But Saylor
wants the Bitcoin.
Saylor wants the Bitcoin.
He wants it all.
And it works out. So, puts me in a place where I can't help but look at the future here and say, like, strategy running the Bitcoin Treasury company, the amplified Bitcoin play in the US, Metaplanet doing it in Japan, Smarter Web in a great position to keep growing and hopefully grow into that kind of role in the UK. And every capital market in the world is going to have its answer to that, or just tap into.
Well, I can envisage them doing I can envisage strategy doing $1 billion a day in better times. I can.
We're quite close to that.
Yeah, $5 billion a week.
Yeah.
Right? I can. Right now, there's not much interest in Bitcoin, like you said.
Right.
And so if you have a look at what the ETFs are doing, if they were doing on a good day, like a BlackRock, or even just combined, on a good day, they were doing $1 billion, right? So that's $5 billion in a week. Saylor in a bear market is doing double what they're doing in a bear market.
Yep.
So let's just say he matches them. Let's just say he gets half and say this was just a good week for him.
Yeah.
So that's $2.5 billion every week he's going to be buying through the bull market.
And I think that's the starting point of like if you're talking about 1% of the fixed income market, call it 5 trillion, that between the money market and the fixed income market, that's like 1%. That, over what time frame, call it 5 years, $1 trillion a year, divide a trillion by 200. That's how much on average per day Strategy alone will be bidding by transforming fixed income capital, fiat capital, into Bitcoin capital, Bitcoin bid. That's the scale of what the world's leading Bitcoin treasury company is going to be bringing to the market.
I think it would be quite ambitious for them to capture all of that, but let's just say it comes through into the system, into Bitcoin. Yeah, I think
so. This is where I almost a year ago now, I tried to do the same sort of exercise of like, okay, Bitcoin treasury companies, they make sense to me. They're tapping into TradFi capital, fiat capital, fixed income and money capital, and offering it better yields. And it's going to ingest a lot of that capital, pump that capital into Bitcoin. What's the scale of that? And how big can Bitcoin treasury companies become? Right now, Strategy is like 90% of the value of the Bitcoin treasury market, and owns 3.5% of all the Bitcoin. And because of the scale of what I think is possible here, I could see a world where they grow to own 25% of all the Bitcoin themselves. And then every other Bitcoin treasury company could, on top of that, end up maybe, who knows, right?
25% of all the Bitcoin.
Yeah, and that would be just Strategy. And so this analysis, I landed on all the other Bitcoin treasury companies in the world combined could also do 25% on top of that. So then you're talking about half of all the Bitcoin in the world being owned by these entities that have been the instruments of hyper-Bitcoinization, right? Because they are how the TradFi capital flows into Bitcoin. It's not osmotic, it's through these capital pumps.
So what have we got at that point when we have, I don't know, a dozen or so Bitcoin treasury companies that own 25% of the supply?
Yep.
50% of the supply, because you put 25 to Saylor, 25 to all the rest, 50%. Now, is that a capitalization of the new financial institutions?
Yes.
Is that what they've essentially become then? Because they've got the base layer of capital.
Yes.
What do they then go on to do?
Yeah, I think they end up becoming, the Saylor doesn't like to think or to describe it. He doesn't. He avoids describing it as a bank.
Mm-hmm.
But they become the best capitalized entities in the world, and they are in the business of lending out capital and getting a return on it, in Bitcoin terms, or doing whatever they can to increase Bitcoin ownership for their shareholders. That is their business, and that could end up looking like lending out Bitcoin in order to get more Bitcoin back. So
there is a problem with Bitcoin lending, and it just occurred to me now that the issue with custody, right? No Maxi wants to give up custody of his Bitcoin, but then how do you put Bitcoin up as collateral, and for the lender to feel like, okay, we've got a hold on this.
Yep.
Because you both parties can't have custody at the same time.
Yeah.
Right? You either do or you don't, right?
Yep.
So how do we solve that?
I don't know that you fully do. As big of a bull as I am on Bitcoin treasury companies, not all of them, but I think it's, I think they're the winners in each market will be very successful. But I think that even though I feel that way, I also think there's a place for cold storage Bitcoin for everybody, because I have cold storage Bitcoin, the majority of
absolutely, yeah,
in cold storage,
and I'm an advocate of that being your absolute primary goal.
Yes.
When it comes to Bitcoin. Okay, I might encourage some people just to get them started, like just buy some Bitcoin, and I won't even tell them to get a wallet yet, right? Depending on how much they're buying, right? But if I'm just getting them started with, like, I don't know, something just, it's just like, okay, just keep it there, and then I will hit them up with the wallet.
Right.
Now you got to take custody of it,
and that's your savings.
Yeah,
that should be your bedrock. You can always have and control and have absolute minimal risk involved there. zero risk essentially. I asked this question of Saylor on a podcast because I was 100% cold storage Bitcoin, and then I'm seeing what Strategy's doing, and it's enticing. And I asked him, like, what do you never sell your Bitcoin, but what do you do here if there's something that can grow your Bitcoin ownership? And he cut right through it and said, for a Bitcoin maximalist, cold storage Bitcoin is the the risk-free rate, but there's still a place for risk capital in a portfolio.
Yeah,
and that made perfect sense to me, and still how I think about it. It's up to the individual to decide what percentage of their portfolio they feel comfortable with as risk capital, and that's ultimately what comes with parking your capital in anything outside of cold storage.
I think that's very sensible. And one of the things I really don't like seeing is that Bitcoin maxis tend to box themselves out of other opportunities by saying you're playing fiat games.
Mm-hmm.
And it's absolute rubbish, right? Like you can't say you're in favor of free markets, or you're Austrian economist and all that sort of stuff, and then eschew opportunities to participate in free markets through equity, ownership, other securities as well. Like depending on what your circumstances are and your risk appetite, there are definitely other instruments out there, other investment opportunities. Many of them actually potentially offer better returns than Bitcoin. And that's something that, like AI, for example, potentially offers more risk, potentially more return. You can't deny that. Okay, you've got to find the winners.
Right.
That's why I don't go there, because I'm building my business. I don't want to care. I don't want to waste my time about that. But there are some people who do that research. So Stack Hodler, you're probably familiar with him.
Yeah.
That's
Great guy.
his thesis. Yeah, he's a wonderful guy, really good guy. That's his thesis, is that Bitcoin, my cold storage stack stays there.
Yep.
But we're in a gold rush with AI and all that sort of stuff. And I want to participate in that as well. And I think the returns in that space are going to far outsize anything Bitcoin will offer as a maturing asset class. And I think he's absolutely right. He got a lot of flack for that.
Yeah.
And I'm just like, guys, don't box yourselves out of stuff. If you're not looking for extra return, don't do that. But not everything else is a shitcoin. Like, there is such thing as investing in businesses that are growing,
and it's a high bar because call it 29% a year. It's pretty damn hard to beat, but it's possible. And
it's risky. Like, we should say that. But that's a legitimate form of investing. Like, investing in speculative startups and technology companies is a legitimate thing to do.
Yep, and that's part of why I love the concept of a Bitcoin treasury company. Depending on your entry point in terms of MNAV, this may or may not play out correctly, but in theory, you can grow your Bitcoin per share by owning a Bitcoin treasury company. And so if you're able to buy it a 1x MNAV or below, right, like, you can, in theory, outperform Bitcoin, because that's the rising tide, and then performance on top of that through execution of the strategy can deliver more Bitcoin ownership. So that, in my view, that's the kind of risk capital that I'm excited about right now. Of course, I haven't looked into AI like at all. I'm fully focused on Bitcoin.
Yeah. Well, there's that fella. I think he's only 24 in the States. I can't remember his name, but he raised, I think, a fund of like 200 million. Turned it into almost 5 billion.
Yeah, the like German name,
German-sounding name. Yeah, maybe it might even be Dutch. I don't know, but
could be Dutch.
He had a thesis, executed superbly.
Yep.
Great timing, and it's just worked out incredibly for him. I think one of the Bitcoin miners was it Iron Energy?
Yeah.
I think that was one of his plays, because they've pivoted hard towards AI data centers as well, and so that was his thesis, and he's done exceptionally well out of that in the space of like 12, 18 months, right?
It's possible. It's possible, but in many ways you
have to pick the winners.
And there's not going to be many of those examples that outperform Bitcoin.
No, there isn't. But that's the point of stock picking, right?
Yeah.
And that's why I don't recommend it for people. But I don't disparage people who do it either. Like,
Yep.
It's not shitcoinery. Like it's investing, bro.
Yeah.
And how blessed are we to have Bitcoin as an option offering such returns
Absolutely.
still, right?
Yes.
Because in a generation, that's going to be over. It's just going to be store of value. We're not going to get these outsized returns for the next, next 15, 20 years, sure. But then after that, it's gone. Like it's just going to be a mature asset class then.
Well, it will diminish. So in that, in Saylor's model there, the $13 million per coin in 20 years, that would be 7% of global asset value at that point in time.
Okay, so he's still got upside. He's modeling.
And he expects that to go to 50. So that's a 7x relative growth still for Bitcoin relative to everything else. Who knows how long that takes? That could take, is that 20 more years or is that 100 more years? We'll see. And who knows if that, that's Saylor's model. That's Saylor's projection of CAGR. We'll see what we actually get.
Time flies. It's a sign of a good conversation. We could go forever. But is there anything you want to tell people? Let them know where they can find you.
Yeah, I'm on Twitter at Croesus_BTC.
Spell that for them because I used to pronounce it Croesus. I'd never heard it said before. But
yeah, we were talking. Croesus is the reason I picked that name is that was the king of Lydia 2,600 years ago who invented bimetallic standardized coinage. So your stamp of the king on your gold coin that says this is this amount of gold. You can trust it, and that decreased friction in trade. So a stepping stone for monetary technology, and I think Bitcoin is the current stepping stone of progress in that domain. Anyway, so CROESUS_BTC, and you can check out smarterwebcompany.co.uk and check out our analytics dashboard.
Tell them the ticker. What's the ticker if they want to look up the stock?
SWC, and we trade on the London Stock Exchange.
Oh yeah, congratulations on that.
Yeah, so we, only about a month ago, 6 weeks ago, we uplisted from Aquis to the London Stock Exchange. And we're trying to move forward as fast as we can in building out, what will hopefully be an increasingly well-known name in the UK as the UK's hopefully MicroStrategy.
Well, congratulations on that. I wish you all the best. And don't be a stranger when you come to London. Give me a ping and we'll have some coffee.
Sounds great. Thanks for having me.
Thanks, Jesse.